Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Well, welcome back. Scott Kelly, founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And, a few weeks ago, I got an opportunity to go to Blueprint in Las Vegas. It's a conference basically talking about the technological advances in the construction and the property industry, commonly known as Contech and PropTech. And I was really fascinated by not only the technology that's changing the industry, but the investors involved. And so over the next few weeks, I'm going to be doing a series of interviews with folks in the PropTech and the construction tech space. And today I have Alon Gorbonos of REVC. It's a fund that's focused on the intersection of real estate and technology. And Alon explains that REVC invests in early stage startups, pre-seed, seed, and up Series A within the real estate ecosystem, specifically in PropTech, construction technology, and real estate fintech. During the interview, he highlighted tech-enabled services and that trend where technology is integrated into traditional real estate business to increase proficiency and profitability. And he cited several of successful companies, which you'll learn about during the show. He emphasizes that real estate, once considered antiquated, is now rapidly adopting to new technologies due to economic pressures and the need to reduce expenses. Alon believes that the current market presents a generational opportunity for investment in real estate tech, which he knows is the second fastest growing vertical in venture capital after AI. So give this great interview a listen, and we'll be back with some key takeaways. Hello, everybody. My name is Scott Kelly. Welcome again. I am the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm really excited to interview Alon Gorbonos of RE Angels. Alon, welcome to the show.
Hi, everybody. Good to be here. And Scott, thanks for having me. That's a big pleasure.
So we got a chance to meet at Blueprint, which is a great PropTech conference that we both went to a couple weeks ago. But so I'm glad to get you on the show. But before we jump into what you're doing at RE Angels, maybe share a little bit about your personal background, what you're doing before you launched the Angel Group.
Yeah, absolutely. So just to make a small correction, we are a fund rather than an angel group. But, I think it's, while small, very important, both to investors and entrepreneurs. And to your question, so interestingly enough, I was an owner-operator and investor of real estate myself. So spent about a decade buying, renovating, selling hundreds of millions of dollars of properties in the United States throughout mainly the East Corridor, focusing on the Sun Belt area, and kind of like decided in 2022 to distill all this experience into where I believe is the next most interesting thing that's going to happen, which is an intersection of real estate and technology. In my opinion, we're right now about to be tremendously, I would say, disrupted in a positive way. And a lot of value will be created. And it's in some ways, Scott, we spoke about it in Blueprint. It's exactly where the financial markets were 20 years ago with the entire fintech kind of like boom that happened. So I'm excited. I think you are now probably in the best years.
Fantastic. So talk about the fund. Talk about the thesis, where you're investing, how you invest, and tell us a little bit more about that.
Sure. So RE Angels, and now, by the way, we are raising our second fund, which will be named REVC, is basically focused on, as I mentioned, an intersection of the real estate world and the technology world. I think that, interestingly enough, now where we are in 2025, both of those areas, tech and real estate, coming from major dislocations. So I think is anything that we see in the economy is cyclical. So both of those great, I would say, huge sectors on their own are coming into now what probably will be a tremendous growth going forward. Now, we are focusing on the early stage phase. So basically, founders and startups that are either pre-seed, seed, or round A, they're trying to go after innovation and technology within the real estate kind of like ecosystem. Now, we think about it a bit different than kind of like the most common used term PropTech. I think PropTech doing a bit of injustice, right? PropTech is just part of the story, but we investing in PropTech, which is technologies that are here to help you manage existing properties, but also we invest in construction technology, the build tech, and we're also investing in the fintech of real estate. So the embedded financial layer of probably the biggest asset class worldwide.
That's awesome. So talk about, where do you see the trends? I'm going to talk about some of your investments in just a minute and some of the things you are, but in terms of what you saw, you are a Blueprint. I was there too. There were literally hundreds, thousands of people there and hundreds of innovative companies. It seemed like there was just people doing a lot of different things in the space. Where do you see the leading trends in both prop tech, construction tech, and fintech as it, applies to real estate and construction?
I think that interestingly enough, within real estate, there is a notion of what I like to think about as tech-enabled services. So you take a legacy trade or a legacy business and you manage to either scale it very fast or basically increase the profitability by just integrating new cutting edge technology into the back office of it. So let me give you an example. One of our probably most interesting companies in our portfolio is PestShare. You should check them out. They just finished raising a tremendous big A round. And I think what they are doing, they're taking the traditional pest control business and with technology, they're integrating the supply to the demand of the real estate operators and taking something that, pardon my French, is not sexy, who wants to deal with pests, but they're doing it in a very unique and interesting way, taking margins, literally quadrupling them from the traditional moms and pops way. So I think that's one of the trends that we definitely see. And we also invested in similar concept in house cleaning and in property management. And we are looking more and more to those type of ideas. I think the second one, which, you can't avoid is obviously AI. But I think within AI is how you take and you are basically integrating agents and artificial kind of like intelligence into the fundamental processes, whether it into the sales organization, like a company of us that we invested recently called Unity AI, or Spatial IO that integrating co-pilots into the design and the architectural kind of like work processes, or PowerSpot, which is kind of like integrating AI into the kind of like inspection of units when tenants moving in and moving out.
So I'm glad. Thank you for sharing some of those success stories. I may jump back to that in just a minute. So obviously, you mentioned enablement as it applies to real estate and construction tech. What about the other side? I mean, you came in from a real estate background, and now you're an investor in tech as it applies to real estate and prop tech. What are the attributes of the founders that you're investing in? Are they real estate people that decided to build tech? Are they tech people that decided real estate was a good market? Who are these entrepreneurs?
It's a great question. And honestly, there is no one answer, to be truthful, or a secret kind of like formula. But I think what, for me, kind of establishing REVC was fundamentally, I was a frustrated user, Yes, financially, you're doing well in real estate, but interestingly enough, from an operational point of view, it was a headache. It's like probably one of the most antiquated, backwards, lack of tech industries that are still out there. And what I've noticed and what I'm seeing in the last 3 years, that to your point, it's not just real estate professionals that are trying to change the status quo. You see a lot of technology people that coming from the cyberspace and the cloud space and kind of like the cutting edge AI, and realizing that the last low hanging fruit are in the real estate businesses. And they are kind of coming, and that excites obviously me as an investor, but also excites the real estate user to use this type of like innovation.
So let's talk about the customer of these companies. You already mentioned that, construction, prop tech, real estate industry has been very antiquated for a long period of time.
Yeah.
And now they're enabling the tech. How do they inspire the ultimate users to change their tried and true methods? Contractors aren't really into AI, at least not yet. Real estate agents are slow to adapt outside of what they do now. How do you see, the customer, adoption of these technologies?
It's a great question. And I think that it's in a way, a few years ago, it was a big obstacle, right? Because to your point, it's hard to go to a contractor that has been working the way they're working for 30 years and saying, from now on, start to do things differently. But I think that now with everything that happened in the last 2, 3 years, and just think about kind of like, Scott, if I may ask, how many times have you used, today is Tuesday, right? So or today, Monday. How many times did you use just ChatGPT in the last 24 hours, right?
Right.
And I think because the answer is multiple times, every person in this value chain is being affected and kind of like expecting technology to come and help. Now, on one hand, you have that. On the other hand, you have also real estate as a whole kind of like grew very much until it plateaued a few years ago. And fundamentally, right, in order to create value in real estate, you can either increase the revenue side or decrease the expenses. I think we kind of like squeeze the lemon as much as we could on the revenue. And now
Mm-hmm.
the only way to create value is by reducing expenses. And guess what? Technology is probably the best candidate to help you to reduce expenses while staying the same efficiency or even greater efficiency, so to speak. And I think you see a lot of, to your point, end user asking for it or almost like realizing it's either adopt or become irrelevant. Almost like, the analogy of the Kodak, if you remember the film, kind of like photography,
Sure.
the digital cameras. So real estate is actually getting it. And interestingly enough, I actually going to make a statement that might be a bit kind of like controversial, but I think real estate in the last year became one of the fastest adopting of new technologies and solutions, right? Because they were so lagging, they now have much more appetite and also much more financial means to do so.
Mm-hmm. So let's talk about, how the economy impacts, because obviously interest rates and other factors of the economy affect construction, affect rentals, affect, buying of real estate, both residential and commercial. Where do you see that factoring into where you're investing now and how you're going to invest going forward?
Of course, it's a great question. And to tell you that I have a crystal ball to where the interest rate will be, I wish then, the situation was different. But I think if anything, we saw actually very recently, the Fed reducing rate probably for the first time in a while. I personally, and that's my personal prediction, I think there will be more rate cuts to come, considering the entire kind of like macroeconomic and political kind of like conversation. And I think that will create, to your point, a lot of interesting opportunities because the economy is getting better. There is more funds that gonna kind of like flow into the real estate businesses. It's almost like the moment you reduce interest rate, the engine start to ignite. And the moment they have more capital, they are kind of like feeling, I would say, better to deploy towards technologies. But I think that goes hand in hand, in my opinion, with IPO markets slowly coming back. And it's also kind of like backwards effects. The moment you have more technology IPOs, more proceeds and more capital is going back to the investors, going back to the funds that can deploy into the private markets. And that kind of like creates this very nice flywheel. Like the last interesting, and we talked about it even in Blueprint, I think the first half a year of 25 was very interesting in terms of M&As. We haven't seen such big amount of M&A activity in real estate technology for a while, I think for a decade. And interestingly enough, while it's not the, classic exits that you take a company and publicly IPO it, you have the legacy players and the private equity starting to buy the startups, the private companies in the hundreds of millions of dollars. And kind of like, I, as an investor, excited because the duration from investment to an exit shortening tremendously. And I think that's a very exciting time to invest.
So you touched on this, other venture firms and private equity making acquisitions. What about the investment landscape? The reality is when I went to Blueprint, I was very new to prop tech. I've been investing and involved in all kinds of technology from SaaS and cybersecurity and everything else. Do you see the investors in prop tech, construction tech being still a niche, or do you finding other firms taking a look at it as something they haven't invested in before, but want to add another option to their portfolio?
I almost love you asking this question because that's what I've been trying to say for years. And now it's actually happening. And I'm happy. And I think it's going to happen to even further extent. And we actually did a preparatory research in REVC, and we found out, believe it or not, that real estate tech is the second fastest growing vertical in venture capital after AI. It's growing
Wow.
faster than cyber, faster than fintech. Now, I want to put a disclaimer. In absolute numbers, it's still not the same, but it's going literally by 60% year over year. And to your point, the fact that, Scott, you went to Blueprint, which is up until a few years ago, if I would have told you as a generalist venture investor, hey, can you want to go to this kind of like interesting conference that is in real estate technology? You'd probably be looking at me like, nah, no, I have better use of my time. But now you are intrigued. You are going because you start hearing more and more about it. And I think that you see the generalist funds are poking into it more and more. And I think that as time goes by, that slowly establishing itself into a mainstream vertical within the venture capital ecosystem. Even Blueprint, 3 years ago, it was probably around 1,000 people. And now we are, I think, close to 5,000 people, which is pretty much tremendous growth, just that conference, right? But you see it everywhere else as well.
So let's talk about the funds. Let's talk about Fund One first. So tell me, who are the makeup of the LPs? Who's investing alongside you? You should Fund One first, and we'll jump into Fund Two.
Sure. So Fund One, by name, can derive pretty much the answer to the question was named RE Angels, Real Estate Angels. And the idea was to put together, including myself, a group of real estate professionals who are extremely passionate about this opportunity and also about being able to strategically help our founders. So all our investors are coming with dozens of years of experience in the different kind of like verticals or value chain of real estate. So we have chairmen of kind of like, multi-billion dollar multifamily operators. We have founders and kind of like partners of multi-billion dollar credit funds. And so in the brokerage business, in the design engineering, in the construction and so on. And the idea is to really get the expert in each field. So if Scott is the best entrepreneur out there and we invested, we're providing Scott not just capital, but also one-click access to this breadth of knowledge of real entrepreneurs, meaning, yes, they're not tech entrepreneurs, but each LP in our first fund build from scratch their own real estate platform. So now when, the tech entrepreneurs talking with the real estate entrepreneurs, it's really like kind of like very fruitful discussion because they can talk about what matters, so to speak. And that special sauce proven to be very successful.
Let's talk about Fund Two. How much are you raising in the fund? Again, what's kind of the makeup of the investors that you're looking for in this fund? And then also, what's the makeup of the investments you're going to make in this fund versus Fund One?
Yeah. So Fund Two, we're targeting $35 million that we want to close. And I think that the idea was to basically take the same concept that we've proven that is working in Fund One. And by the way, performance is over the charts in Fund One. And taking that and now writing bigger checks, but still keep sort of like the essence of being early stage investor, helping our founders. And also we are followers. We're not leaders. So to all founders that listening to this podcast, when you are raising a round, we want leads around. We'll wait until you have a lead investor and we will join as a strategic real estate partner to that fund, whether it's a generalist fund or maybe a real estate tech fund. Now, in terms of the makeup of our investors, yes, we're still going to preserve our unique, focus on real estate professionals, but I believe also we'll have a bit kind of like broader audience or a broader scope of LP that are also kind of like financial allocators and professional investors that see the opportunity and want to monetize, if that makes sense.
Thanks for that. So I like to ask this question to everybody on the podcast because speak to potential investors in the fund, LPs, funds of funds, high net worth people and the like. Why your fund and why now?
I think that, in my opinion, first of all, why our fund is performance, in my opinion, matters the most. And if you look at our Fund One performance, we are tracking top decile. And I think getting out of 2022 vintage, that's a very important factor to distinguish us among other similar, GPs or other venture capital firms. I think also to that point, not only our model, but real estate tech, as we spoke a bit before in this podcast, in my opinion, is the most interesting kind of like under the radar vertical by the generalist funds. And I think you have a generational now opportunity to invest in what, in my opinion, gonna become very major and very mainstream in not too long. Like I'm talking about 2-3 years ahead of us. So kind of like being specialized also, in my opinion, helps you to really pick the needle in the haystack. We all are operators. We all kind of like understand real estate. We invest with a very simple rule, Scott. When we look at the technology, we're asking our LPs, not do you think it's a good one? Are you actually going to be a user? Are you actually going to pay for it? And believe it or not, that basic fundamental proven to be very, very, very right and very, very true. And the moment that we know that our kind of like end users wants to buy it, we want to invest in it. And that's kind of like help us becoming very successful. And, why us? I think that kind of like there are very good, venture capitalists in our field out there. I think we have an interesting edge, but I think in general, kind of like you can go wrong investing in this, vertical, in my opinion.
I'm so glad you mentioned, wanting to, buy the product. Sometimes you have to eat your own dog food to really be engaged. And I appreciate that feedback. So, well, what else do you want to share with our listeners today? Any final thoughts or ideas?
Well, I think in general, we are now and you'll agree with me, in probably one of the most interesting times in many, many years. I think not only that we're coming from probably, I would say, tougher few years, I think that the pace of innovation and how technology is basically now going to disrupt anything and everything is haven't been before, and it's going to become faster and better and bigger. And I think that if to any one of your listeners, if you haven't invested in venture in general, probably now is the time. It's going to be very interesting. I think that also because of that pace are changing the models or the playbooks. It's no longer just the big billion-dollar VCs. I think, Scott, to your point, investor as yourself who are like, kind of like lean and fast and smaller are probably the one to win this new wave of innovation that is coming. And I'm super excited. I think it's going to be very, very fruitful to all of us.
Fantastic. Well, where can people learn more about RE Angels, REVC, and get in contact with you?
Yeah. So first and foremost, our website. So reangels.vc. And you can look at our portfolio. You can get in touch. We have a LinkedIn page also, pretty active. And, feel free to email us, at hello@reangels.vc or Alon at revc.fund, any of those works.
Fantastic. Well, Alon, thanks for being on the show today. For those listening, make sure you like, comment, and follow this great interview. We've got more coming in the prop tech space. I've been inspired to interview more great prop tech investors like Alon. So, again, Alon, thanks for being on the show today, and we'll talk soon.
Thank you very much. Thank you for having me.
Well, welcome back. The interview that I had with Alon, had some really interesting, takeaways, from the real estate industry and what's happening. And as you mentioned, it's rapidly growing within the venture capital space. And honestly, before I went to the Blueprint Conference, I knew very little about the space. And, it's undergoing positive disruption, which in an area where hasn't been any change in decades. And that technological advancement is creating substantial value for investors. As we mentioned, he's involved in prop tech, construction technology, and real estate fintech companies. And, the industry's increased appetite for this technology is driven by this need to reduce cost and increased profitability. And so Alon and others are in a key spot right now for this growing industry. But his fund, REVC, focus on a strategic investment model, bringing real estate professionals as limited partners to provide founders with industry experience in addition to capital. And I think that's extremely valuable because you have an industry that's been not really technologically advanced for many decades and now is rapidly using technology to really improve the opportunities to make money in the real estate space. So we got some more great interviews coming up with emerging managers in this prop tech and construction tech space. So give it a listen. Make sure you follow us, like, comment, and share this podcast. I'll see you soon on the Emerging Managers Podcast.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.